Hey, what's up, everybody? Cameron Hemphill here, your host for Medical Millionaire. Hey, guys, thank you so much for taking the time to tune into the podcast. Our goal is to give incredible value and insight for practice owners. So, if you own a practice, a medical aesthetics practice, or you are thinking about getting in the industry or this specialty, this podcast and all these episodes we make, they're 100% designed for you and to help you take your practice to the next level. Guys, I have a good friend on today. We've known each other for a few years. We've been on panels together. I feel like I run into this guy like every conference I go to. He's deep in the weeds of what's going on in the world of aesthetics. He owns a group called the Skytel Group out of Dallas. His name is Ben Hernandez. He is very well, let's just call it, in the tune of what's happening in the private equity side of things, the buy side of things, the consulting side of things. Ben, I don't know how many practices that you have touched and consulted at this point and transacted, but man, it's so good to have you back on the show. Welcome to the podcast.
Cameron, thank you so much for having me back. And yeah, we were just talking. It's been about a year, so happy to be back. Appreciate it. And yeah, definitely enjoy seeing you at all the conferences and learning from you as well every time I go.
Absolutely, man. I appreciate it. I just saw you recently at GAC in Miami. Shoot, before that was like a weekend before when let's see, we were at Face It Live, Gretchen's conference, and then before that it was a symposium that Scott Callahan puts on. So I've seen you a lot. I know that we live across the country from one another, but it's nice to have you back. So just for the audience, can you just give us a quick update? What is Skytel Group? What is it that you guys do over there? And then, you guys, he has a report that they came out with a company called Q-Sites. And it's an incredible report that we will get into. And that's really the purpose of this episode. It's like what's going on in the world of aesthetics. But before we go there, Ben, just for the audience, like give us a recap, background, history, update. I know that a lot of people that are tuning in know who Skytel Group is and who you are and what you do, but there's definitely some people that do not. So we just give us a quick update.
So yeah, for those of us who don't know SkyTail, we do three things. On one hand, we do management consulting, where we take true strategy, and we typically work with one of two type of clients. One are typically founder-owned businesses that either have large practices or multi-site organizations that are wanting to grow and scale. The other one is financial sponsors, such as private equity. We help at times with their portfolio companies to deal with very specific opportunities that they're seeing or issues that they're having. The second side of the business is investment banking. Most of our business there is we take companies, typically founder owned, and we sell them to either private equity or the platforms, the strategics. And then finally, we have a smaller private capital side where we invest in either our clients or the spaces in which we play. And yeah, as you said, Cam, we were very excited to put out a white paper because, as you know, there have been so many new entrants into this space. And one thing that we consistently saw is just a thirst for data. And I know you have a lot of it as well. And we talk about it a lot. So this will be a lot of fun.
Yeah, absolutely. And the last channel of that to the business that you guys are now working in, that's the newest site, right?
It is. It was propped up in March of 24. So, 8 months ago or so. And we did it because some of our early consulting clients would ask, would you ever take the risk alongside us with the advice that you're giving? And, back then we had like one or two acorns on our balance sheet. So there was zero capital to deploy. But that's what got the wheels turning. So it's been a really exciting piece of the business.
I love it. I love it. I think it's definitely needed. Just to kind of break this down for you guys. So the consulting side, and Ben, you can stop me anywhere, but what I want to do is explain it in more of a understanding approach for the audience. So the consulting side of the business, the way I understand it is a practice will come to you guys and say, you know what, I am interested in potentially exiting my practice, whether that's soon, later, how can you put me in position to trade at the highest value? And then, of course, I'm sure you guys have expertise internally that can help guide them along that journey. Is that right?
That's correct. And we're generally agnostic. Oftentimes that is why folks come in, which is, show me how to turn my B's into A's and my C's into B's, if you will. But we're agnostic. Someone could come to us and say, I want to give my organization out to my child down the road. We take a similar approach, which is really solving for any opportunities to make the business more valuable, whether it's to yourself or to the potential partner or buyer, whichever it may be. We take a pretty similar approach.
I like it. Yep. And I mean, basically, what I hear from that is, hey, we'll take your current infrastructure, see where you are at on a grade, whatever that grade is, and we're going to fine tune it to increase that grade, right? Which ultimately is going to make the practice run more efficiently, effectively, make it more profitable, more attractive for whoever you're going to hand it to, sell it to, whenever that may be. Pretty cool exercise. And then what's interesting, guys, is coming out of that, it makes total sense. I'm sure a ton of practices were like, hey, can you also help deploy some capital to put us in position to grow based upon whatever area that makes sense to deploy capital? And so I would assume you guys would go through some sort of underwriting diligence process. And at some point, I'm sure it's made sense to participate and partner, which I think is amazing. And I'm sure that, these practice owners are super thankful for having the opportunity.
Yeah, and that one is a really mutually beneficial one. I mean, as you said, we do the diligence side of things, which we typically do anyhow, as we're running consulting. But from a diligence perspective, make sure that it's an investment that we think will get a good return for our limited partners. And then the beauty of it is, then we become true partners, and we work together on maximizing that practice's efficiency, and hopefully down the road, if they're ever ready to go to market, getting a nice return on that. So it's a really fun process, and it brings you really close to your partners as well.
That's amazing. I like it. It's going to be interesting to see. I know that it's, March. I'm sure that's moved super fast. We're recording this in November of 24. From March to 24 to November 24. I mean, not a huge time, but it'll be interesting to see, like, in the next 24 months what what happens there. So, dude, let's definitely stay in touch and remember these conversations so we can go back on them and listen, and then see where things are in the future.
I would love that. Yeah, hopefully by then, Cam, we're raising fund too.
I'm sure
We can look back on some success here on our first one.
you'll be looking back and saying, "Hey, do you guys remember Fund One?
That's right.
That was a long time ago." All right, so let's get into the meat. So this Q-Site, like, first off, who is Q-Site? Who are these
Yeah,
guys?
so Q-Site is a guide point company, which is basically a large firm that is very, very data driven. So they have all the data that you would ever want within various subsectors, and Q-Site is the metaesthetic side of it. I think it was July of 23, we sat down for lunch and had this idea of, wouldn't it be great to put out a really extensive white paper? Because all of us, as you know, are getting calls from financial sponsors as well as practice owners themselves wondering, what is the true data out there? And there wasn't a lot out there at the time. I mean, you could get things from different places, don't get me wrong, but we wanted to come out with something really comprehensive. And the thought was, Q-Site, you have all this amazing data. Skytel has the industry knowledge, kind of boots on the ground that can translate that data ideally into English. And that's where we had the thought. And we've spent, the past half year or so really trying to refine it as best we could.
I'm glad you guys did it. And, I know that AmSpa came out with a recent report. I'm glad you guys did. Just a quick insight for the audience. I don't talk about Growth 99 a ton on the podcast, but we're releasing a benchmark report that we will be pushing out there. I think that's actually going to come out maybe in the next 30 days, something that we've been working on as well. to your point, Ben, it's like the industry is craving data. And it's interesting that, you guys have obviously, that's been in your ear and you guys took initiative and pushed that out. Right. So we're going to go through this report together, and I've spent the time digesting it. Obviously, I know that you've probably been through it a lot as well, probably more than you'd like, but I appreciate you taking the time because it's extremely valuable, guys. So we're going to get into the meat of this. I think that if you're turning in, make sure to pay attention, because there is some interesting stuff that has happened in the aesthetic space, right? So, what are patients spending? How many practices are opening? Like what is the industry spending their money on when it comes to services and treatments, like to the dollar amount from Q-Site and Skytel that put out this report, right? Like there's a lot, like what is happening in weight loss? What is happening in private equity? Because I know that there's a lot of talk about it, but now we have some really cool meat and data behind it. That being said, let's talk about it. There's a couple interesting points that I wanted to point out here, Ben. The first one was non-surgical patient spend that I saw in the report was estimated to be right around 15 billion in 2023. And that's up 4% from the previous year, right? Which is, it just shows that, like, oh my gosh, like it continues to grow. Like 4% of 15 billion is a lot of cash. So talk to us a little bit about that. I mean, because I know that you guys have been at this, like, for years, and as you continue to see demand from the consumer side outpace supply.
Yeah, this stat was interesting to us for a few reasons. One, I think there's a chart in there where if you look at 2017 and you go to 2024, this market has doubled in size in that amount of time. So, I mean, that's phenomenal. In 2017, I see you have this up here, 7.4 billion, 23, 15 billion. In that short a time for an entire market to double is just phenomenal and just speaks to the growth. I think the other thing is, we oftentimes see reports that point to the CAGR, which is basically just compounded annual growth rate of closer to 10 to 12% over the next decade. So the 4%, while not great compared to that number, it's actually very positive from our perspective, because if you think about what 23 was, high inflationary environment, we were just coming out of or in the middle of potentially a mini recession. We knew we had the presidential election coming up. These are all things that from a consumer confidence perspective make people nervous. So for it to still grow 4% is tremendous. I know you and I talk sometimes about other healthcare subsectors, like in dental, it grows 3.5% a year. And that's a good year. So if you put that into perspective, you're exactly right, Cam. It just really speaks to the dynamic space that we're in.
Yeah, I agree. And that's why I wanted to call that one out, because to your point, like, yeah, dental, it's like 3%, good year, but 4% in a very, let's call it very interesting world and dynamic, to see it grow at that pace is amazing. And really, like, from 2017 to 2023, doubling, 7.4 billion to 15 billion in that short a period is, I mean, that's just a different world. In fact, I got into the industry late 2016. I like saw that just continuous surge, which has been crazy. I mean, so many practices have opened up. I met so many incredible people, and unfortunately, I've seen practices close too. Right? It's like that's a real thing too.
Yeah, a lot of competition out there. I know you mentioned earlier on the new med spas that opened in 23, and that number was, I think, 17%. And you can dissect a lot from that figure. I mean, when you have 17% new med spas, if you think about what that points to, Cam, it's exactly what you said. You see some that are failing. It's increased competition. It also, we have a provider shortage. There's more demand for services than we have providers. And so you actually have providers that are leaving existing practices to open up new med spas. And that was a big reason for that 4% growth that you're mentioning. So There's a lot to dissect there. You're exactly right.
Yeah, I mean, 17% growth last year in new medical aesthetics practices. That's an outstanding number, especially in like given the type of environment that we were going through. Dude, that's bananas. I mean, it's incredible. I don't know what it's going to be for 2024. I mean, we're consistently getting hit up by practices that are still opening. I don't know if you have any forecasts on what 24 looks like, but I know that AmSpa was projected to see like a 10 to 12% growth rate. I'm not sure if you guys have saw the same thing.
Yeah, we're expecting something similar as well this coming year, and I think Q1 and 2 of 24, we were continuing to see that uptick. Uh, that's both great, but it also presents challenges to existing practices. Like from a growth perspective, the new practices were the ones that really helped fuel that 4% overall market growth you mentioned. And above a certain revenue level, what we saw in 23 v 22 is actually declining revenues for the larger practices. So, it's kind of a mixed bag, but it's certainly something that, if I'm an existing practice owner, I start thinking, okay, how do I protect myself against this? Is it, marketing obviously is a big one, making sure that I have really good training, making sure that my patients trust my brand, not a specific provider as much as you can anyway. But there are a lot of things I think that you can take action on with this data of, how do I retain my providers as well. So yeah, some pretty neat things I think that you can do with it.
Yeah, retaining your providers is key. Like I've seen lots of practices where providers will jump. They'll want to go open up their own practice or just go to another environment. Maybe it's a compensation thing, a personality thing. I'm not sure. That's like retaining providers is like more important than like if you look at the data, more important than retaining your patients. Not saying that retaining your patients isn't important, but they are very important to keeping revenue and growth and market share where you want it to be. One of the interesting things too that we were seeing, and this kind of goes with the report, was the marketing, right? So as competition goes up, as you see this 17% growth, and we're projecting to see it, let's call it 10 to 13 to 14% growth in 24, for example. And I think 24 could actually is even more of an interesting year than 23, given the fact that this is the election year and
Agree.
a lot of uncertainty that was taking place. And in fact, for our business, we saw like demand from online search drop, like install pretty significantly mid October to like November 10th, and then it went back up.
Yeah, I think waiting for the election to be over, and then, where we are bullish is, from an inflation perspective, the 50 bip rate cut should help with consumer confidence. Hopefully, we're seeing that in 25. But I agree with you. I think 24 is going to look like a wonky mixed bag.
Yep.
But, Q4, I think, will be pretty positive from a numbers perspective. And then heading into 25, that could be an exciting year, I think.
I'm bullish on 25. I'm bullish, obviously, in this industry and it being so strong when it comes to recession. Now, there's some interesting data in the report that I'll call out there, but just like really the patient loyalty speaks volume of wanting to get services and treatments done by providers, at their practices, and they want to invest in confidence. They want to invest in feeling good and looking good. And we'll get into that. But in fact, there was somewhere in the report. I'll need to go in and find it, but it was talking about the recession, like how households are wanting to invest more in getting treatments done than purchasing household items.
Yeah, it's fascinating. And there have been a few reports out on this that, for whatever reason, medical aesthetics is very recession resistant. And that's a beautiful thing for our space. And once people get in it, they don't typically stop services. It's actually very rare. Even as consumer confidence goes down, it's one of the services that people will cut last. And there have been a few questions as to why, if it's a non essential service. And one of the psychological reasons, according to a few reports anyway, is due to when you don't feel very good about the environment you're in, investing in oneself is actually something that psychologically people tend to do. Whether it's, working out or eating a lot or metaesthetics in this case, that's something that people will invest in. But yeah, you're exactly right. I think that's a fascinating statistic.
I can't remember where it was in the report. I'm trying to find it now, Ben, but I was reading on it earlier. I think it's like in the first few pages. But it
20
is it page 27. Let's go there really quick. Okay. Yeah, this scrolls pretty quickly. Just want
It
to
says here, studies have shown patients would prioritize treatment before household expenses if they have
That's what it
already
was.
begun treatment. Yeah, so
Yeah.
it's one of those things like eggs are too expensive. Won't buy that, but I'll continue to get my neurotoxins.
You know what's interesting is that's what my gut told me too. Like just in talking with my wife and her friends, like like she's the ideal candidate. She's the ideal patient for a practice owner that's going to continue to go. And
Me too, Cam.
I'm just like, okay, like I can see why it's like let's not call it full recession proof. Like I know that patients like they slow down, maybe they skip a visit or whatever. But I mean, to back this up with data and look at it and say, okay, cool, like yeah, maybe we could slow down on our grocery bill because I still have to go get treatments and services done.
Yeah, it's fascinating. Once you start, it's proven that it's pretty difficult to stop. I mean, it works. People see the results. And unlike other healthcare, it's one of the few that people go in excited to actually go and they leave happy and it's a good experience. So, yeah, it's a fascinating statistic. I agree.
Yeah, and that's a good point. It's like I hate going to the doctor. Hospitals, doctors don't like to do it. I think that's pretty common for most men. But I'm a patient. I go to medical aesthetics practices and I have a great time and I leave there feeling great. And so I can speak to that too, and there it is backed up by data. Like I think like when you compound that too with the weight loss, like, feeling good and then looking good inside outside type like two-way punch, it's hard to miss, really going to one of your services and treatment appointments.
Yeah, and weight loss was another interesting one, wasn't it? Like the category grew to 1.2 billion in 23, which I think it was zero point 0.3 billion in 22, and it was, I think the stat was like 236% increase, right? So it's phenomenal. So already you're baselining, benchmarking against that. And what we did is we refreshed Q1 and Q2 as well, Cam, and I think it grew like 85% Q1, Q2, 24 v
Oh,
23.
cool.
So like it just continues to grow. So if you think about what that does, there's a stat in here as well. I think that a lot of these patients too, if you talk about expanding a market, a lot of these patients that come in from weight loss were not originally medical aesthetic patients. So what you're doing is you're getting a brand new patient base, brand new demographic. And there's another stat in here, I think, and I forget what the exact number is, but of those that come in that were not, a lot of them end up adopting broader medical aesthetic services. So if you think what weight loss has done, it's been quite fascinating. It's opened up the market. It's added another ancillary services under the medical aesthetics arm, and the growth is just phenomenal.
It's exploded. It's exploded. No, I agree. I think that's a really good point. I think, like this whole talk of semi-glutide, GLP-1, like you see the ads everywhere, hymns, like, I mean, shoot, it's all over. And you know what? Like it works and people are getting benefits and results. And so, you've seen the surge. Now they go into a facility, they go into a practice. And if that provider is doing what they're supposed to do, educating that patient on all the other treatments, services, benefits that they can do on the surface of the skin, right? Like it's opening up the world for education to learn more about the benefits of aesthetics, which is interesting. So that makes total sense to me.
Yeah, that's a great point on the education piece. I know a lot of our clients bring that up of how do you do that without feeling salesy? And to me, it's all about treatment planning, right? Like it would be as well, Cam, I think you like to work out a lot. It'd be as if you were my trainer, and I'm like, I only want you to work on my biceps. I think your responsibility to me would be to say, that's great, we'll do that as well. But here are the other things from a totality perspective. And it really does allow you to, okay, great. Now that you're doing this, it opens the door for things like, because you've heard Ozempic face or butt or whatever. It allows you to talk about, okay, maybe dermal fillers, biostimulators, some of these other things. And by the way, as people start looking better, they start feeling better, they see the results, that's a perfect time for them to invest more money into other services that ultimately they probably want if you're treatment planning.
Totally. And I think like there is like, even though that demand is outpacing supply when it comes to customer, again, guys, customer demand based upon provider count. It's outpacing now. And I truly think that the consumer is, this would be an interesting data point. I don't know if it's in this report or not, but it'll come out eventually. Like, what of the total US population based upon, like, let's call it men, female, from the age of, I don't know, I guess I can go to like 20 to 65 if you want, big range. But out of that cohort, I think like there's probably a big chunk in that category that think a med spa is just Botox. I
Yes,
mean, like obviously not for you and I because we're in it every single day, and it's like, man, like how do you not understand that? But go talk to your, like people that don't work in the industry. It's astonishing to hear. So, you're going to continue to see this grow, and it has to grow through education. Like to your point, yeah, I mean, if you're going to hire a personal trainer and you're just going to focus on biceps, like, it's that trainer's job and responsibility to educate. And so, you don't have to be salesy. People like to buy information.
exactly. You're the expert. I want you to tell me. It'd be as if I went to you and said, hey, Cam, I want to do 2 videos a week for Instagram or something along those lines. And I would hope that you would say, great, we can do that. But how about this for an overall marketing approach? And you're the expert. And I would actually appreciate that.
Yeah, totally. You're like, guide me, right? People want to buy expertise. They want to buy expertise, and so I think like, especially as an educator and provider and academic, like, man, these people are well equipped to give information
Yes.
and help. Like, so if you guys are tuning in now and I would include that in your consults, your treatment planning, your journey, like just continuously educate your patients. And then those patients are going to go tell their friends, their colleagues, like information spreads, right? And so you've really seen that through weight loss lately. There was
So
I mean,
true.
to what you're saying, like, yeah, it was a 236% increase in GLP-1s, like weight loss semaglutide from 2022 to 23. That's huge, right? Like 1.2 billion is spent, and I think you said in the stat here it was 880 million in total revenue Q1 Q2, which was an 85% increase in the same time period from 2023 to 2024. Yeah, that's the call out right there in the data.
Yeah, I mean, that's amazing. And I think there was a number in there that monthly weight loss spend went from 14 million to 136 million. I mean, it's just the growth is just unbelievable.
Yeah, right there. Yeah. So on page
Yeah.
23, from 21 to 24, yeah, monthly spend 14 million to 136 million. Dude, that's 3 years.
Isn't that amazing? Yeah, I mean, isn't that the beauty of medical aesthetics as well? Is this is something that wasn't on anyone's radar in 22. We
Yeah,
talked about the chart that we've doubled in size from 17 to 23, and these are some examples as to why. As the science gets better, as the technology continues to improve, there are services that Cam we might be talking about next year that
totally.
aren't on our radar, and I think that's the beauty of this space is all of these ancillary things that are now being absorbed within medical aesthetics. And then at large, from a global perspective, certainly in the United States, the focus on overall wellness, a lot of it, which kind of falls under our umbrella, it's just such a perfect time to be in this space. I mean, if I wish I owned a medical aesthetics practice sometime because talk about great timing, right? It's not often that you come in on the first or second floor of an industry.
Yeah, no, absolutely. I totally. I wish I owned like four or five. I've had opportunities to invest in them like years ago. On just like unique opportunities, just being in the industry, just like you. And I've passed. There has been times where we were going to open one up and have to get it, because I shoot. You don't want me touching your face or body. I am not qualified for that at all. But I'm a business guy, and I could definitely find a location and know how to market the crap out of it, and know the numbers, and know how to run a consult, and know how to get the provider and get the right people in place to do it. I think I've just been too busy.
Running your company.
I mean, we kind of hit that. I mean, from that growth phase, from 2016 all the way up to the numbers that we had last year. It's just it's nuts. I haven't had time. So, but I hear you, man. It's still very very interesting to me, and I think that even though we've seen this incredible growth over the past years, it's there's going to be a new exciting thing that's going to come out, and that's the beauty of it is in 22 I wasn't talking about weight loss at all. Maybe some practices were doing that, but now it's like the talk of the town.
Agree. Yeah. And, as we mentioned earlier, brings in a new demographic of patient that starts adopting other core med spa non-invasive services, which is exciting. And, as you said, new things continue to come out that aren't on the radar. And, like I see the page you're on, like dermal fillers is a perfect example. In 23, it actually shrunk, I
Yep.
think 7% from as compared to 22. And you wonder why, right? It's like, well, that doesn't make sense because we're talking about weight loss and Ozempic face or whatever people were saying. Well, it's because of biostimulators, more natural, longer. So it's really fascinating that the type of service remains, but as the science technology changes, it's just a different kind of adoption. Now, with that said, on fillers, we did see an uptick in Q1. We're starting to see that creep back up, but that was an interesting one that we saw when you looked at the different segmentation of services.
Yeah.
Everything else grew.
Everything else grew. Yeah. Derma fillers shrunk slightly, right? Nothing dramatic. Still up from 2021. In 21, it was 3.1 billion in total sales. And this is derma fillers, and 22 it went up to 3.4, and 23 down to 3.2. But you're right. It's the only data point on this entire graph that did shrink. Now look at weight loss. Like that's like just crazy.
Right.
That's like, I mean, I know that we've talked about it, but you can just see those charts. It's just bananas. That's like just massive growth. And so if it continues that run rate, just on weight loss for a second, at what was it, 800 million in Q1 and Q2 for this year. If it
Right.
continues that run rate, that'd probably be at what, 1.6, 1.7 maybe.
That's right.
Yeah, so you're going to see another big pop in terms of weight loss for the overall year if that run rate continues, which I
Yeah. And it
assume.
was 1.2 in 23, just like for comparison on what you just did. Isn't that amazing?
Yeah, all year long, which is wild. So, but yeah, let's look at this report in more detail. I think in fact, there was another graph before I get into that. Okay, it was this one right here. Let's see. So this is page 10. This graph is really interesting. Now, this graph we'll get into, guys. It's U.S. aesthetic sales share by segment in 2023. So this is like broken down by the entire segment. So Ben, will you walk us through this really quick?
Sure, yeah. And this didn't really surprise us. I'll start by stating that we talked to a lot of practice owners, obviously investors as well. And generally speaking, we like a practice, right? If I had a magic wand that's maybe 50 to 60% injectables, maybe 20% or so energy based, maybe 10% skincare. And then, you round it out by some of these things we're talking about, like weight loss. And what we're seeing here is it kind of broke down that way. Interestingly enough, 32% of sales were neurotoxin. I don't think that surprised anyone. 21% dermal fillers. So that's, right in line with that 50 to 60%. and then 21% energy-based devices. Now, one thing that's interesting is weight loss was right behind that now at 8%. So for that to be number four in that short of a time, we thought was really interesting. Skincare was 7%. I think that's, an opportunity for a lot of practices. We suggest that to maybe be a little bit higher if it can be. It just has really nice margins. But yeah, I think overall it was really interesting, but fortunately not overly surprising as to what we would have hoped for.
And what's interesting too, I think neurotoxins carry the least margin, right?
Yeah, that's a good point. I'm glad you mentioned that. Like neurotoxins, the plus and minus, right? It's like the COGS, the cost of goods sold on those are 35-40% oftentimes. So that's the negative if you want to look at it that way. Like if I inject $1, 35-40 cents are flying out the door. So, and I haven't even paid my people or paid my rent yet. Now, the beauty of it, though, is that I know that Cam is going to come back, according to this report, in 91 days. That was the average, which is kind of interesting. I know Cam's going to come back in 91 days for that. So that's the repeat revenue perspective that makes this industry so attractive. And then if you balance it out by some of these other things, Cam, that's where we get to that ideal, like total COGS of maybe 20-25%, because like energy based skincare, professional grade skincare, those are lower cost of goods sold that kind of start from an overall portfolio perspective. You can get the cost of goods sold there. But yeah, that's a really good point. Neurotoxins have a high cost of goods sold percentage on those.
Yeah, and it's the highest thing sold. It's predictable, right? Like, and I think like you can get volume discounts, but the nice thing about it is you get repeat patients, and then you get another opportunity to educate your patient on all the other procedures and benefits that your practice carries, which is huge.
Yeah, you brought treatment planning up earlier. That's a perfect example of why you should. You compare practice with the makeup we're talking about, like this makeup that you're showing, as opposed to 100% injectables practice, very easy to see which one's going to be more profitable.
Totally. And the energy-based devices, like that actually it's the same as derma fillers. Derma fillers was 21%, energy-based devices was the same. And I mean, I know that the profit margins on energy-based devices are much higher than fillers, right? Like,
Yes, much
yeah,
higher.
much higher. So, I mean, yeah, I mean, I was at a recent event and we were talking about there's a specific device we were talking about to operate the machine. It was a microneedling device. I won't say the name or brand, but it to run it was cost about $100 to run the device, and the average practice was selling. It was like a package type opportunity, but basically like $1,500 to $1,800 a treatment.
Yeah.
I mean, that's a very profitable machine,
Yeah.
and
So, hey, what is that? 7-8% COGS? I mean, that's unbelievable.
that's like SaaS business. It's
I
like
know.
oh my
That really is.
god. I'm like, well, why not just open up a practice and just do microneedling?
I almost said that just now.
Oh, it's crazy. Just focus on that. Like, man, I know what would happen though. Like, I totally get that you have to have other services and categories, but if you look at like Scott Callahan, like he knows threads like to a T. That guy gets it under. That's his area of expertise.
He's unbelievable. Yeah.
Yeah, he's unbelievable at it, and that's like what he's honed in on. But like, I haven't talked to a practice that's just like, hey, we only do like microneedling. It seems like, and this is carries positives and negatives, and I get having a broad based service menu, but I do think some of the practices and practice owners just want to carry everything as well and not specialize
Yeah.
because the practice down the street has the same stuff, and it like just a call out there. I think it's important to specialize as well.
That's such a good point. I mean, it reminds me of like Steve Jobs, right? One of the first things that he did when he was rehired at Apple is he basically got rid of most of the products and focused on like two or three. And if you're the best at something and you have that level of focus, yeah, usually what you see is a very focused entrepreneur that knows their lane and therefore is able to completely succeed in it versus someone that's, bit mediocre at everything. Completely agree. I think having a true focus, knowing your patient base is such an important piece to running an organization. That's a great point.
Totally, totally. And I have this really cool AI tool that kind of breaks down like I've ran it in various different ways, but essentially you could say, okay, I'm going to buy this device. Let's say this device costs us 150K, some or more, some or less. But I put it that, and then I said, okay, how many treatments do I have to do in order to pay off this device in 1 year, 2 years, 3 years, 4 years, like 10 years? I think I put up to 10 years. And then how many patients do I have to have? And I put in like the percentage of what it would cost to finance it, like the patient acquisition costs, like, and it is mind blowing. Really, like when you go from just doing like this specific microneedling device, if you were just doing, let's call it, I think it was like 5 treatments a month versus like 20, which is not, that's only 15 treatments. That's nothing crazy. Some of these practice owners I'm talking to are doing like 15 a day. And so it basically cuts down you can pay off this device. I think it was like, cuts the time off by like 80% or something like that. And then when you have it all paid off and you have like, no interest on it, your margins go up even further. And so it's just really interesting to kind of play with the numbers on how many patients do I have to service to pay this device off? What's the cost? And what does that look like? It's very interesting. I think every laser rep should actually be using it.
That's a fascinating exercise. I'd love to see that. That's pretty neat.
Yeah. I'm like, dude, if I was selling lasers, like this would be my number one tool that I would use to be talking to providers about.
Well, you might be getting a lot of calls from laser techs after that.
Oh yeah. Okay, dude. So the other interesting point, this was interesting to me on this report. Something I wasn't aware of. I figured like so 11 billion was spent on non-surgical or sorry, let's see 11 billion spent on surgical compared to 15 billion on non-surgical.
Yeah.
I always like maybe it's just because I've been in aesthetics, like that was something in the report I thought was pretty interesting, because the cost per transaction is much higher on a surgical treatment, obviously. So they
Yes.
have to do less, right? So I'm like, man, how many Botox appointments can you do in order to like compare next to breast augmentation, rhinoplasty, right? For example, that's a $4 billion delta. So people continuously want to invest in non-surgical treatment.
Yes. Yeah. And that speaks to a lot of things, right? I mean, the technology, science getting better for non-invasive. In fact, I know you're in it as well. We're in the plastic surgery space, and some plastic surgeons have mentioned to us that the effects that semaglutide has had on their practices, like people who are going to do liposuction, okay, maybe not anymore. So as these technological things change, I think plastic surgery is changing along with it, of course. But yeah, agree. I think certainly the growth in medical aesthetics is outpacing
Yep.
plastic surgery, which has been around longer. In fairness, it's a more mature market. And so the growth rate is closer to other, medical subsector growth rates. But yeah, that's a really good point. That one stuck out to me as well.
Yeah, and I don't know if it was like where it was in 22 or 21. I didn't see that in the report. It might be in there. I definitely want to go through this thing again, but it just goes to show like business changes and evolves. And if I'm a plastic surgeon, I see a lot of plastic surgeons that obviously adapt and bring in aesthetics into the practice, and we've seen that. But if I haven't, or I've only kind of done it, or I haven't, I think some of them still may devalue it because they're a surgeon. Like it carries a little bit of ego, if you will. And man, I think that they better really start considering this going forward. That this is probably going to. I mean, the overall spend is outpacing. So like eventually, it just kind of goes to show that the aesthetic side is going to outpace your surgical side of your practice eventually.
And that's such an interesting conversation, Cam, because I remember a few years ago, you'd go into a plastic surgery conference and, you didn't really talk about medical aesthetics. You didn't talk about non invasive. you've been to the recent ones as well. I know they're starting to introduce those sessions in there. So it starts showing you, I think, macroeconomic where that market is going, which is okay. It's going to start to be adopted to your point, which is wise. But then you start looking at, okay, what do investors think about this? And if you look at some of the statistics, like we talked about this space, the non invasive space being resistant to market economic downturns, plastic surgery gets hit pretty hard oftentimes during market economic downturns because sometimes it's a one time thing you need. And you might put it off a year or 2 years before you cut a $40,000 check, or depending on what you're doing. So that's one thing. The other thing is, from a risk perspective, surgical revenues are a lot riskier than, from an investor perspective anyway, surgical revenues are a lot riskier than non-surgical revenues. So they're actually valued lower, which I think shocks a lot of people, than, medical aesthetic non-invasive revenues. So completely agree. I mean, obviously our first suggestion is run your organization according to your vision and your DNA. But if you are open to that, we are big proponents of, adding, kind of that medical aesthetics, non-invasive side to surgical practice. It works really well. It also reduces like key person risk and things of that nature, that if you're a, single surgeon or even two surgeon organization, you have quite a bit of risk there, because yes, you're able to produce 4 or 5 million revenues by yourself, which is unbelievable, by the way. But it's all dependent on you. So it's a really fascinating conversation.
Totally, totally. Yeah. So you're saying that the valuations on the EBITDA trade at a higher rate on the non-invasive side.
Correct. Yeah. If I have a $2 million business, both of them, two of them, one's surgical, one's not. The one that's not is going to trade higher.
I figured that. I mean, that makes sense. Like, yeah, you're going to go and it's a one and done. Typically, most times it's you're buying the I call it patient lifetime value. That's what you're buying, is the loyalty and the repeat, right? Which kind
Yeah.
of brings me up to my next point. Like on here, page 27, it talks about retention. Patient retention is oh my gosh, so important. In fact, a quick little call out here, like, you guys, please invest in running a consult the right way, building out a treatment plan. I know I talked about it a few times on recent episodes, but this is what's really going to help protect you in patient loyalty, patient retention. The benchmark here that Q-Sites puts out is patient retention should be high. And in fact, they say greater than 70% is most attractive. Since higher retention facilitates revenue substantially and has a compounding effect on a patient visits and therefore profit. A lifetime client can be invaluable, considered a patient who returns 4 times a year, spends $100 to $500 per visits, and stays more than 3 years. What's so interesting about that? That's the same data I have.
That's awesome. I love that. That's really good to hear. And this is what was fun about this white paper with them, right? Is QSite had the data. And I think the data, if I recall, is 48-50% retention is what they came up with. The 70% was then from us, which is like, that's great. We see it. Our best in class, what we try to push for is 70%. And then it's funny you brought this one up, because it's my personal favorite KPI, Cam, because like if you have a practice that's 50% and one that's 70%, there are a lot of KPIs that as a standalone don't tell me a lot. It's like, okay, but I want to look at this other one. This one tells you a lot, doesn't it? I'm curious your viewpoint, because this one to me tells me I'm a patient walking in and you're greeting me correctly at the front. From a provider perspective, you're treating me well. Your chairside manner is good. As I'm leaving, you're trying to rebook me. After I've left, you're adding some sort of value. Maybe you're sending me an email. Certainly, you're sending me reminders that my appointment's coming up. So you're keeping me in touch with you and top of mind. So it's this one KPI that takes the clinical as well as the operational efficiencies of an organization. It's the one that I really enjoy looking at, because the other thing is, like, if I'm paying you a bunch of money to bring patients in the door and I'm letting them leave out the back door, I mean, that's pretty frustrating that all you're doing is replenishing patients versus growing a practice and organization. So, yeah, I'd love your thoughts on this one since you went to it.
Yeah, no, absolutely. I mean, I see like, I mean, marketing companies, social media, SEO can always produce new leads. We can just take it there, right? You like, you have the ability to produce leads, and because the audience hangs out on those platforms. They're either going to do a Google search, or they're going to look at your Instagram, your social. You're going to hit them with a Facebook ad. You have a website. You have Google My Business. So you can bring leads in, right? But like, kind of zeroing back, you have to have a system to convert them, and you have to acknowledge the fact that someone's raised their hand and they're interested in a service and a treatment. And if you nail that with systems, processes, tech, and you have the ability to convert these leads, at a decent percentage, that's like nailing the first thing, right? So if you can convert at a really high rate and bring them in, educate them, get them on a treatment plan, and then have a robust checkout process. And the robust checkout process that I like, that um, what is best in class that I see, is upon leaving, educate them. Like during the treatment, let's just roll back a little bit. During the treatment, educate them on all the products and services you have, not through sales, but information, and you're the expert, right? And then as they're checking out, rebook them, ask for feedback and get a Google review out of them, educate them on the inventory that you have, right? Most practices carry a skincare line. That's going to enhance their experience, right? So that's an upsell, which keeps them loyal and wanting to come back and reload when that product runs out. Connect with them on social media. Great time to get a testimonial. Have them call you out on social media on a story, right? Get them on a membership plan. Then they're really low. That's going to increase best in class when it comes to patient retention, right? So it's important to obviously get the leads in and convert them. But if you do not have that checkout process dialed in, it's going to be a turn and burn operation, and you're continuously having to spend a tremendous amount of money on marketing and be stressed out to get new clients.
That's great advice. And isn't that cool? Like these little data points, that's where I think folks can go in and compare it against their practices. And let's say that I am listening to this and I'm one of those 48% and I see 70% and I listen to your advice. Like these are things that like data is so valuable because if you benchmark yourself against this, you kind of know exactly where you can tweak. You know what's possible anyway. Like if I'm 48%, okay, what should I be? And if 70% is your new target and benchmark, then I heard what you said and I'm comparing what I'm doing versus what you said, and I can take action on some of these things. And that's how you really start turning the practice or organization into this like really efficient machine, which is pretty exciting when you see folks do it.
Dude, you just nailed it. Like that's the whole point of the data, right? Like let's get the data, let's look at it, let's talk about it. And then where are we at as a practice? So it doesn't matter if if you're not at 70%, cool. It's an area to explore, of opportunity to evaluate you are. And now you can bring this up in your weekly sales meetings with your team and say, hey, we want to go from Y or X to Y or whatever, guys. Like, what are we not doing? And focus on that retention. But you have to know your numbers, Ben. Like, yeah, that's the other hard part. Is I see time and time again where the practice owners, they may not know what their retention rate is, and maybe not have the best systems and tech in place to know what that is. I think EHRs and EMRs are obviously getting better, and if you're using them diligently the way that they're designed, like you should be able to pull these reports pretty quick. But that's another issue that I see too.
100%. That's exactly right. And I'm hoping that, with consolidation in this space and the newfound focus on data and knowing what's going on in practices that we'll see that get better. And they're continuing to get better, as you just mentioned, Cam. But yeah, I completely agree with you. I think practice owners have to have the ability to have good tools in place to give them a chance to succeed.
Yeah. Man, I know we could talk on this report for a long time. I don't know how much more time you have, but like I think we've covered a ton of meat and given a tremendous amount of value. I know you're super busy, and I'm as well. So why don't we do this, guys? For the audience, that I think there's a lot more to go through on this. Like for example, let's just do a couple quick call outs before we go, Ben. 42% of all aesthetics patients were millennials or younger in 2023. Like that's amazing. you know, so and again, back to the exercise you and I just did. I see the data. Okay, cool. If that's what it is, what are we going to do in terms of our marketing and the demographic of the approach, right? So, like, you see the data. Who is your audience, and then what action are you guys going to take, right? Let's just go. Is there any other call outs you want to talk about before aesthetic transaction?
That's actually the one that I was going to mention is the 42% millennials or younger. And you just nailed it. Like now that you have this data, you can analyze, is this who I'm reaching out to? Is my service mix geared toward these people? Because, a decade or 15 years ago, that wasn't the case. It was an older, female wasn't really talking about it because medical aesthetics wasn't as accepted as it is now. Now things are preventative and so forth, which completely changes the demographic of the patient base. I would say one thing would be, then we haven't really seen the uptick yet. We keep saying we're going to see it. We haven't seen it. Male adoption was kind of interesting. Male adoption into this space hasn't been as fast as we would expect. However, if you look at spending habits, they line up with the females, and in some cases outpace it. And
They
that's
do
something that I think surprised us, which was a pretty interesting. I think it's like in a chart there,
right here.
kind of an Excel thing. Yeah, so that was kind of interesting, I thought.
Yeah, that shows that the males actually spend almost $400 more per visit.
Isn't that interesting?
Yeah, I thought that. Yeah, when I pre-read this, that was very interesting. I'm like, huh, wonder why that is. But yeah, it shows here, guys. In 2023, females the average like ticket, for example, 1380, males 1766, which is really interesting. But and then it breaks it down by like segment, female, male. There's also a really cool report in here, guys, that talks about Gen Z and younger millennials, Gen X, boomers, what they spend, what services they invest in. You guys, you have to get this report. Like it's amazing, and take the time to read it. And then don't get the report and just read it and just tell yourself you read the report. Like read the report and take action. Like that's my biggest thing is there's a lot of people that are like listen to podcasts, they listen like they read books, audio, and they just like don't just read it to read it. Like take notes from it and then implement all of the data points that can move the needle for the practice because that's what's going to put you guys in a position to have ultimate success, and especially going into 2025. Like this is a perfect time over the holidays, digest the report, and then take action based upon what the data tells us.
Yeah, I think financial data or KPI data really can drive everything from culture to operational guidance. We do it all the time, by the way. I mean, I look through things like this for investment banking and management consulting firms to see how we're tracking. And it's really neat because, as you said, Cam, I do take notes and I put it against our numbers and I keep it there as a reminder of where we have the ability to tweak because it allows you then to double click into why am I lower than industry? And therefore, it allows you to start correcting some of your behaviors. I mean, it really works because there's that saying, I know you say it too, you get what you measure, right? And if you're measuring that, that's something that you'll be focused on.
Yeah, no, absolutely. I 100% agree, Ben. It's been a pleasure having you on, man. I think we could talk for another hour for sure.
Yeah.
Like if they want to go get the report, where's the best place? Have you guys published this on the site or?
Yeah, I think we have it on our website. You can also, kind of use any of the emails on our website that are available there, and we'll get it over to you. It's certainly something that we like sharing with the industry.
Yeah, I'm on their site, guys. If you go to Knowledge Base, I believe it's under blogs, business development. It's on the site.
Perfect.
Yep. And if for some reason you guys can't find it, just get in touch with Skytel. These guys are best in class when it comes to understanding the market. They are like extremely detail oriented when it comes to understanding what success looks like in order to run an effective practice. I know quite a few people on Ben's team. They're amazing. They're out of Dallas. So if you guys are seeking for advice on what to do within your aesthetics practice from a consulting standpoint, maybe you're looking to exit. Maybe you're looking to exit in 10 years from now. Maybe you want to run your practice like you want it to exit so you can get the highest value from it. That's like, that's one of the things I always say is run it like you're going to sell it, because that's how you can really get tightened up in your numbers and your efficiency and your process. And you run it that way and you're going to have a very robust machine. So I'll leave it at that, guys. Thank you so much for taking the time to tune in. Ben, thank you for joining. And you guys, if you found this valuable, this specific episode, please share it. Let's keep the conversation going. I know that you have colleagues that could get a tremendous amount of value from this white paper and from Ben and I just kind of going through the data and talking about taking action from the data. So I'll leave it at that, guys. You guys have a wonderful weekend. Until next time, happy injecting.